Let's talk about the analyst community. Looking forward to Wednesday's briefing by the management of Zenith Bank. The conference call is expected to clarify a number of areas in the lender's latest second quarter 2021 results rolled out on Friday. Let's get a conversation started on this side as we bring on Joshua Odebisi. He's the head of banking and research analysis at Vetiva Capital Management. A good evening to you, my friend. Joshua, it's good to see you. Welcome to the show.
Thank you for having me.
Give me your first word. This earnings from Zenith Bank came in a bit late in the evening, after hours on Friday. So what are the key notable items for you at Vetiva?
Well, what we noticed, I think we'll start with, obviously, gross earnings. They were flat year on year. I think, obviously, Zenith Bank actually did quite well in Q1, but there was a bit of a slowdown in Q2. Although, profit after tax still came in 2% year on year higher. I think the main factor for that was the loan loss provisions, which was down by about 17% year on year to just under 20 billion. So, which is what really helped to support the profit after tax. If not for that, I think overall the gross earnings were flat. Interest income was down. Non-interest income was a little bit mixed. We saw, I think, was about a 10% increase in improvement year on year. So overall, it's a bit of a mixed bag. But obviously, the bank did announce that they're going to give out another 30 kobo interim dividend. So at least that's a plus. So we're waiting to get a bit more color from management of what they expect for the second half of the year, because I think there are a few factors that will definitely determine whether or not this is going to be another, impressive result or year-on-year growth from Zenith Bank.
Well, you can close your eyes as far as Zenith Bank is concerned in terms of dividends. So close your eyes on that. You don't need to worry too much. But you're looking at earnings per share 2.4, loan loss provisions down 17.2%, cost to income ratio 56.1 reading, and net interest income 1.6, just a scratch there. So, but let's talk about the non-performing loans provision in loans and advances and operating costs. How did this bank scale through in the April to June period?
Well, I think what we saw, obviously, when you talk about non-performing loans, they saw a slight worsening. It went from about 4.29 to about 4.51. So it is slightly worse, between the quarters. Loan growth was also a lot slower, but I think that was to be expected given how we've seen the situation evolve from last year. Obviously Q2 was when we started to see the full impact of COVID-19 in the economy, and what happened was a lot of loans were restructured, and so that pushed the can down a little bit, and so there was a little bit of speculation that there would be, further loan loss provisions taken as we got further and further away from that restructuring, which happened, and as we got into this new year, it did not occur in Q1, but in Q2, I think that's, started to show itself. In terms of loan growth, like I said, it was pretty flat. I think it was maybe something like 2% growth in net loans. Overall, I think the banks are obviously being a little bit more cautious with regards to growing their loans, and that is to be expected. So it's not really that surprising, but overall, I think they are still on track.
Interesting, Josh, if you look at the treasury bills and government securities that the Zenith Bank posted 28.5% decline year on year in terms of interest income low. It looks like, why is everybody dumping treasury bills and government bonds?
Well, it's just down to the fact that obviously, we've been seeing weaker yields in the government securities for quite a while now, and that has obviously impacted both interest and non-interest income, obviously, in terms of trading. We've seen weaker trading volumes for government securities across the board, and in terms of interest income booked on these securities because of the lower yield. So it just impacts on both sides of the books, and so it is to be expected that there will be a pretty steep decline in what is on their balance sheets and what they book in income.
Interesting how all of this is pacing out. How is Zenith Bank shares been valued right now? Some folks looks like the Zenith Bank is currently trading at a PE of 3.29, price to book of about 0.7.
Well, what I'll say is, in comparison to their peers, I think they're pretty much in line. That 0.7 price to book valuation is pretty much, I think, just around what their peers are also valued at. And I'd say that, obviously, it is my personal opinion that a lot of our banks are still, very much undervalued. But due to the current situation in the market, this is kind of around where Zenith Bank should be.
But very interesting, we've got a very better GDP year-on-year, 5.01% for the second quarter. How come the banks' earnings were not flying as such?
Well, I mean, obviously we have to remember the context of the GDP figures is that we're coming from a base of Q2 20 where where GDP was down by over 6%. So this is really just a recovery, and it's not even, if you want to think about it that way, it's not even back to zero. So I'd say that it's still a bit of a slow recovery, and there are a lot of factors within the broader economy that have affected the banks and their operations and have led to, like we mentioned, obviously the interest income and currency situation, as well as loans and advances. So all of these things have come together to sort of slow down the aggressive growth that we saw throughout last year and 2019. So it's just a bit of a slowdown in momentum.
But do you think Zenith's earnings will mirror the rest of the big banking names on the counter, perhaps with the exception of the dividend payout, by the way?
Well, what I will say is there will be a few outliers. I think we're still expecting Access Bank, just due to the strong results that they posted in Q1, to come in quite strong in, for the half of the year. Even if they do take a hit, probably that very strong Q1 will push them quite, far beyond. Then UBA as well, they are probably going to maybe outperform slightly. GT obviously had a very slow first quarter, so the chances are we're going to see a bit of a similar story with GT for their half-year results. So I think overall, this is it's a mixed bag. I wouldn't say that Zenith Bank is, exactly the template that all the other banks are going to follow.
What's your outlook on the management briefing by Zenith Bank on Wednesday? What are you looking to hear? Or what questions will be posing to the management? In what area would you want to have more details of these latest numbers?
Well, I think obviously we've looked at the last half of the year. We would want to get a bit more color on the expectations for for the MPLs, and also to understand exactly what the expectations are with regards to the interest rate environment and how that's going to affect their interest income and how that's going to affect gross earnings as a whole.
Yeah, will Vetiva Capital be issuing another report on these Zenith Bank earnings anytime soon after that?
Right after the conference is
the
done.
management on Wednesday. So we expect you guys to push that out on later on Wednesday.
Absolutely.
Thank you very much. We're looking forward to that. We thank you for your insights and analysis tonight. Joshua Odebisi, Head Banking Research and Analysis at Vetiva Capital Management. Have a great evening and enjoy the rest of your week.